Starting. All attendees are in listen-only mode.
Good morning, good afternoon, good evening, everybody. I hope you're having a great weekend. This is our Trader User Group weekly roundup for the trading week ending December 26, 2014 as we round out the year 2014. This will be a holiday shortened overview. I just wanted to give you guys just a quick take on the markets right now. Also, before I jump in, just as a quick reminder, we've got our year-end holiday special. I'd highly encourage you, especially those of you out there that are not members, to come in and take advantage of it. It's a really nice discount off our normal fee, which is still very low compared to a lot of other services out there. And as you guys that are following us regularly know, we're pretty spot on with where the market's going. We've made good money this year in 2014. I think 2015 is going to be a little bit different, and there'll be some new opportunities, but we definitely want to take advantage of them. So check on the link here at this blog and in this email for the special holiday offer here that ends the end of the year. Now, let's jump into the markets. What I've got here is the e-signal charting package out here, which is a very strong, powerful charting package just using advanced Git. And what I'm running on here is I've got the E-mini S&P 500 futures on the screen here, and you can see it's a daily chart. So one of the things that I wanted to show in this chart here is just the pattern that we're in, and it should not surprise anybody in this pattern that we're moving higher. Now, right at this point right here, I had our members getting aggressive bullish, and you know, right in this area here, we were going bearish, and we had some good indication that told us this is what's going to happen. You can see right here we've got a 3-leg, a 4-leg down here, and a 5-leg being formed up in this area here. I do believe that we can move a little bit higher, and I think the end of the year, of course, everybody's probably been hearing the end of year market price movement tends to be bullish, especially in the latter part of December, the last 2 weeks in December. But you can see this 3, 4, 5 Elliott wave pattern. I believe I see as just a near-term objective up here. We could come up all the way up to around 2150 area actually, but I see trouble brewing in a little bit of a pullback. We're setting up for some very good, as we call it in our membership, what I call a BED, a bearish divergence signal. And we're getting this really starting to set up. It's just now starting to set up. We just got a couple of positive strength indicators above the 0 line here. I do believe it can go a little bit higher, but there's going to be a very strong downward force acting on the market here as we get up into this area right up here, probably as we approach 2100, if we can make it up at that area. But if we do, I do believe that I'm going to be more interested in taking some of my longs off the table, as well as hedging my risk to the downside. You know, we've had since I think 2009, we've just been in a straight rocket ship up. I mean, that's kind of where we've been, right? I mean, if I come out, and let's just put it on a weekly chart here just to show you what I'm talking about here, and I'll move it out in time here. You can see right in this area here, I mean, this is the chart, right? And if we come over to the left-hand side of the screen, this is 2009. In fact, right in March 2009. And you can see this wide channel that we've been in since March of 2009. We haven't really broached it. In fact, we have not even, we've had just and this is a weekly chart, so we had maybe 1 week here that we were intra-week below this trend line, but we very rapidly recovered. And, you know, we've touched the northern part of the boundary quite often. And every time we've touched the northern part of the boundary, we've pulled back. Every time we've touched the southern part of the boundary, we've gone higher. And you can see here on this weekly chart, and this is going back all the way to 2013, summer of 2013. Right into this area here. We've been showing just a little bit less strength as we go up. Now, I've shown this chart before, and I'm showing it again just to show you guys. And this does not mean that January 15th we're going to all of a sudden start going down. No, that does not but it tells me that we are setting up for a little bit more downside action than we've had in the past. You can see the upward vector on this chart. It runs like this, or this channel runs like this. In fact, this yellow line right here is almost paralleling the vector of this channel. You can see the width of this channel right here. All right, and we've exercised and touched both areas of this channel, and it's still a very valid channel. Okay, now starting in the summer of 2013, you can see there's a channel within a channel, and you can see the vector of this channel right here. Essentially, the vector of that channel is going like this. So there is a slight subtle difference in the trajectory of this channel versus this channel right here going up. You can see it right here, obviously, right? So typically when a market starts to reach a peak, it starts to accelerate, right? So you have a vector that goes like this as the market goes up, and then as it starts to near a peak, the vector increases in speed. And then at some point it has a pullback, a test. There's still the buy on the dip mentality. It comes back up, and you've got this kind of chop until it gives it up like this. So you have a period of chop. Now, this is a weekly chart, so this period of chart can be 6 months. But then it gives it back up again. And we get back down to a more normalized level. Now, these markets are a little bit different, as I tell our members, because in these markets, we've got a lot of liquidity. We got liquidity that's coming in from Japan, right? And Shinzo Abe won re-election, and he's just come out and announced this weekend that he's going to do another 29 billion or over a trillion yen in more stimulus. We've got the, I like to say, the People's Bank of China. I don't know why they call it the PBOC. There's no people in it, but they don't certainly represent the people. But it's China. And China is looking at doing more targeted stimulus. All right, so you got China. You got the ECB. They're throwing money out there, and we got a key meeting coming up January 22nd. And they're talking about putting more money in. So you got Japan, you got China, you got the ECB, and there's a lot of pressure on Draghi to do that on January 22nd. Okay, you've got, of course, the U.S., which is withdrawing the stimulus. They did that in October, but they're maintaining artificially low interest rates. So you've got these. And let's not forget our favorite friend over in Europe, UK, Britain. They're keeping their stimulus in place. So you've got all the major industrialized countries in the world. Japan, the second biggest, China, the third biggest, the U.S., the largest, and then the ECB zone, which is also very, very huge, and then you got UK. All have money sloshing around in their country. Now, when the music stops and inflation starts to hit, I think you're going to see gold start to react. That's why gold right now is having a very difficult go of it. Now, I know we had a little bit of a bump up in gold, but I think gold is going to have a very difficult time until all of these markets starts to rationalize and this money starts to work its way off the balance sheets of these government agencies and back into the economy. You're going to see inflation flip, and you're going to see interest rates go up dramatically, and you're going to see some weakness in the markets. How much weakness? No one really knows, and we don't know either. We don't really care, quite frankly. I don't really care. All I know is we're going to get the signals, and when this happens, whether it's in Q1 of next year, Q2, or maybe even 2016, we're going to be playing it to the right side. But you can see this market as we're moving higher right now. So I do believe we can go a little bit higher through the end of the year. And let's come back to the daily chart here. And for our members, I showed you guys how to determine whether we're a buy on the dip or sell on the rally kind of mode. Right now, we're a buy on the dip. We switched into a buy on the dip mode. But I think that will change sometime in January, February timeframe. Now, the other one that's very important, check out the Russell. The Russell here made a key contribution on Friday. And I want you to look at something. Let's see if I can put it on a weekly and see if it'll show a little bit better here for you guys. Yeah, it shows a little bit better. This is a weekly chart of the Russell. Now, as I blow it out here, you can see, and let's increase the size here. For those of you with bad eyesight can see it as well as I can. Okay, here's the Russell right here. This represents 1 year in time. And this is also showing me some really potential storm on the horizon kind of scenario. This was the high made in Russell in 2014. This was the opening price in 2014, 1154.95, that blue dashed line. You can see right here we became a buy on the dip. We were really, the Russell for the entire year has underperformed. This was a key support area for the Russell for the entire year. We took it out and then we immediately regained it back. That became our key pivot for 2014 in the Russell. And then the Russell has quite frankly outperformed the E-minis over the past few weeks. As you can see, going from November in, the Russell's outperformed very strongly. In fact, you can see the prior peak is now, we're sitting right there. That is going to be resistance, but I do believe we're going to take it out. I do believe we're going to come back up here in the Russell, take out the prior pivot high for 2014, and then finish strong for the year with the Russell. But again, just like the S&P 500, there's storms on the horizon. And as you can see down below, well, let me just back it out just a little bit. And it's even more so on the Russell with small cap. And again, this is a weekly chart, so we can go out a little bit more in time. But you can see right here this huge, huge thrust in the Russell. Right at this, and you can see, let me just highlight, use my pen here. You can see this huge thrust in the Russell. It clearly outperformed everything until January of 2013. And then right at January of 2013, which is right here, the Russell went into a funk. It pulled back into a key support zone. We tested it a number of times. We finally broke it in October, but it regained it the very next week. But we ran into a funk. Meanwhile, everything else performed nicely, but you can see this dramatic bearish divergence as we come back up into this area here. So I do believe there's enough energy and momentum to take us up a little bit higher in the Russell, but I do believe that based on this divergence, we're going to have a little bit of a pullback. Now, our members know how we trade beds and bulls, buds, but and again, I would take advantage of the offer that we have out there because our membership is doubling. It seems like every 6 months or so we just add in a lot of members to our site, probably because we're doing well with the markets. But you can see right here, this is where I'm looking at the rut right now. I think we can have a little bit more strength as we go into the end of the year. And then once we finish out the year going into January, we got a couple of triggers coming up, of course, with oil and a few others. I'm not going to spend time going through the oil markets right now in detail. I'm not going through in detail the Russell and the S&P 500, show you where our R1, our resistance, first and second levels of resistance and support are. But this is kind of how I'm looking at the market right now. The other one that I'm looking at very closely is Treasuries. Bonds, and as you can see here, we've got a very interesting pattern that started taking place in the bond market. And this is where everybody overreacted. And it's really interesting what happened in the bond market. You can see right in that area here in the end of first quarter of 2013, everybody thought interest rates were going to go through the roof. So bonds started selling off. They had a huge shellacking, and the bond market sold off dramatically. And then when people realize that, well, the Feds are going to keep interest rates low and inflation is almost non-existent. And by the way, oil plays a key role in this too, by the way, with low interest rates. But you can see right in this area here, we started off January 2nd of 2014. Bonds have been in this tight channel right here, up and down. I mean, we've honored this channel dramatically. This is a weekly chart. We were only out of it for maybe a few days during the week and recaptured it. But at no time were we severely under or over this channel. You can see this one abnormal event right there with a very tall hair on it. It's what they said on this candlestick. But it just, I think it was almost $1 trillion changed hands in the Treasury market on that day right there, but that was an anomaly. But you can see right here where we're now, every time we hit the top, we come towards the middle, maybe towards the bottom, and we kind of fluctuate in there. So in extending this out like this, should we get a pretty strong pullback in the equity markets, then bonds are going to honor this channel and stay like this, and it'll continue to confound folks. Should we break this channel and start to come through these support points right there, then I think bonds are going to look like this right here and start a big move down. And it's going to create a window of opportunity for a lot of people in a number of different commodity markets as well as equity markets. We're going to spend time for our members. We're going to be going through where there's going to be opportunities, not only in equities, but in commodities and futures and indices across a number of different fronts. So this is kind of what we're looking at right now. So net, folks, I think the markets are going to kind of drift a little bit higher, grind a little bit higher. We'll have some interesting days how the markets are going to move. But I do believe that we're setting ourselves up for some more downside action. For our members, just stand by in our chat room. We'll go through some of this stuff as well as our Tuesday and Thursday morning sessions and Sunday night sessions. We're going to hold a Sunday night session this weekend. Next week is another holiday week for us. We will be active on Tuesday. New Year's Day, of course, we won't be. And we're also going to, but we'll be active for next Sunday as well. Thursday morning session we will not hold. All right, everybody, I hope you're having a good holiday period. For those of you that are not members, I highly encourage you to come on in and check us out. We've got that special running, that holiday special. Take advantage of it. A number of people already have. Love to see you guys in. Otherwise, I'll see our members on the inside. Have a really great weekend, and I will be in touch with everybody. Bye now.